We are live on YouTube now. I will admit everyone in the next 1 minute. Lakshman, I would request you to start welcoming everyone once I admit all.
Okay. Kindly later. Once you admit, I will.
Can we switch on the video?
Yes, sure, sir. You can. Yes. Lakshman, you can start.
Good evening, everyone. On the behalf of CGPI, I welcome you all the participants in the today's webinar on the transitional issue in the transitional credit in GST. Our today's speakers, Raghavendra sir and moderator Naveen Kumar sir has joined the session, on the Zoom meeting. This meeting is organized by our South Team Zone. Over to you, Naveen Kumar sir, for further proceedings and introductions of this.
Ranav, can I?
Yes, sir. Yes, sir.
Okay. At the outset, I welcome all the participants, and I also thank our office bearers for organizing this important program on transition credits in GST. In fact, we are still talking about transition after 5 years of GST law. According to me, transition was something the least which they could have organized under the GST. Unfortunately, it got into a lot of litigation, and the matter went up to the Supreme Court, and finally the department itself filed an affidavit, and the Supreme Court ordered that a window should be kept for about 2 months to enable those who missed credits or those who committed mistakes in taking credit, or those who could not file it on time. There may be various reasons for non-availment of transition credit. And this Supreme Court decision was followed with the CBAC guidelines also, stating that the procedure to be followed for transitioning the credit into the GST regime. Now, to talk about this important topic, we have just about 4 or 5 days left to take action. This is the last chance insofar as transition credits are concerned. And we have an eminent speaker, Mr. Raghavendra, who is a CA and who is a practicing advocate. He specializes in indirect taxes. He appears before various authorities and very frequently in the High Court and also Supreme Court. He also specializes in foreign trade policy matters and FEMA, and he is a regular speaker in various forums, and he has spoken in various conferences, seminars, workshops organized by many organizations, including ICAI, ICSI. He has also addressed the departmental officers in programs organized by NASN and CAG. He contributes frequently to law journals. He has written many articles, and he has handled transition-related matters, many cases in various high courts. So we are eagerly waiting to listen to him. And there are some issues which have cropped up, because while issuing the guidelines, the CBIC seems to have put some conditions which, according to me, are unreasonable. I do not know whether it will lead to one more round of litigation, But as of now, our aim should be to get into that portal and ensure that the credits which were eligible under the old regime get transitioned into the GST regime. Of course, it is subject to verification. There is some process which is specified by the board, which the learned speaker would talk about. Today, we have opened this program to members as well as non-members. The participants who are non-members can consider becoming members of CGPI, and our primary focus is in CGPI is only GST, which is also evident from our name. We have organized many programs physically and also through online mode in the past. And recently, our first residential course was organized in Pune, which was well attended. So we have many such programs lined up. So kindly become members of CGPI, or to the speaker, Mr. Raghavendra, to deliberate on the topic assigned. Thank you.
Thank you, Naveen. Thanks for the introduction. And continuing with what Naveen Kumar mentioned about the transitional credit, it is interesting that we are continuing to discuss the transitional credit even after 5 years after introduction of GST from 1/7/2017, and exactly after crossing the 5th anniversary on 1st July 2022. In 22nd July, Supreme Court had to decide this matter, shows the situation where we are in. And considering the fact that we are still waiting for the tribunal also to come. Everybody is very happy about the transitional credit being allowed by the department. But lot of conditions are being put, and also there is a number of and Supreme Court itself had to say that all the issues will be kept open and the credit will be given only subject to the verification by the department. In this regard, I would like to start my presentation. I'll just share the screen. Yes. What I have done is, I would like to start this by starting with the provisions of Section 140, just to give you an overview about the transitional credit provisions. And thereafter, I would like to continue with the Supreme Court judgment. And so prior to that, I would also like to discuss the High Court judgments, which led to the Supreme Court, all the matters going to Supreme Court, and there culminating where the department accepted that they had to open the Tran 1 again in order to correct the technical glitch and the clerical mistakes. Let me start with the provisions of these Section 140 of CGST Act. The CGST Act, as you are aware, when effective from 1/7/2017, provided for the transitional provision in Section 140, and interestingly, in Section 174(2), there was a saving clause, which also provided for carrying forward of all the credits. And coming back to Section 140, though I have set out only the CGST provision, it is relevant to note that Section 140 of State GST Act also provides for transitional provisions, wherein the VAT credit under each state legislation was allowed to be carried forward under the SGST Act in each of the states. In case of central taxes, Section 140 of CGST Act provided for the carry forward of the accumulated credit, mainly relating to the SENVAT credit. SENVAT credit, which pertains to the central excise duties as well as the service tax on the services, which were availed in the returns filed by the assessees under the erstwhile tax legislation, that is referred as existing law in GST. Now, let me quickly take you through the provisions under section 140. So, subsection 1 refers to the provision of the where the assessees are allowed to carry forward the credit which are taken in the last return filed by such person prior to the 1/7/2017. It is a simple and straightforward provision which provided for taking the uh, carry forward of the accumulated credit in the last return filed under the earlier laws, that is the central excise and service tax in terms of central GST and VAT returns in terms of state GST. So second, subsection 2 covers the carry forward or the transitional provision where the unavailed portion of credit on capital goods is permitted to be carried forward in the transitional return, that is Tran 1 return. Essentially, as you are aware, under the SENVAT credit rules, the 50% credit was allowed to be taken in the first year and the balance 50% was allowed to be taken in the subsequent year. Therefore, whatever the credits which were taken and only the 50% balance remaining as far as the capital goods is concerned, that was remaining unavailed and that was allowed under section 140 bracket 2. 140 bracket 3, essentially this covers the transitional provision relating to the credits of the inputs lying in stock or in semi-finished goods or in finished goods. Therefore, 140 bracket 3 is a special provision wherein the credits which is not availed, and interestingly, it also applies to those persons which were not registered under the existing law. That means those who are not registered under central excise or say service tax, such as traders, were also allowed to take credit of the excise duty and service tax on the goods lying in stock in the inputs, as well as semi-finished and finished goods. And there was a special mechanism wherein Tran 1 was required to be filed, and there was a percentage of 60% in case of CGST and 30% in case of IGST, which has to be filed over a period of 6 months. That was the provision given in Rule 117 as far as Section 140 bracket 3 is concerned. Coming to Section 140 bracket 4, the person having both exempt and taxable activities, who either a manufacturer or a service provider, providing both taxable and exempted goods and services, he is allowed to take credit under this 140 bracket 4. And the provisions of subsection 1 and subsection 3 could be followed. That means to say, the assessee is permitted to take the transition of the credit both in the return which is filed prior to 1/7/2017 as well as on the inputs lying in stock in terms of section 140 bracket 3. Coming to subsection 5, it relates to the receipt of input and input services which were where the duties and taxes were paid under the existing law. However, the invoices are received after 1/7/2017, but within 30 days, which were extendable by another 30 days by the commissioner. 140 bracket 6. This relates to the those persons who were paying under composition scheme under the existing law, that is composition under the erstwhile law, that is excise and service tax. Essentially, it is available to the composition scheme under the service tax law only, wherein the credits in respect of inputs held in stock and inputs contained in semi-finished or finished goods held in stock is also allowed in terms of subsection 6. And subsection 7 provided for transitioning in case of input service distributor, and the invoices are received even after the appointed date is also permitted to be transition in case of an ISD assessee. Subsection 8 provides for the transfer of unutilized NVAT credit by the taxable person who was having centralized registration with one head office and many other branches as the branches across India. Essentially, a service provider who was registered under the centralized registration scheme. And the credit was allowed at such place wherever he has chosen by the assessee, having the same PAN number, and he can choose any one of the place where he was registered under the centralized registration. And finally, 140 bracket 9, where credit on input services is reversed on account of non-payment under the SENVAT credit rules, even that was permitted to be availed under the transition, where the payment is made after the appointed date, that is from 1/7/2017 onwards. These are all the provisions essentially which pertaining to the transitional credit transfer. Now, coming to the rules which enabled the filing of returns under the GST law for availing the credit of transitional credit is essentially there are only two rules which is relevant at this point of time. Rule 117 and 120A. 120A is actually relevant, was at that point of time, so that it provided for revision of Tran 1, and it was so worded that the time limit and as far as revision is also same as the due date as provided in Rule 117. This is a peculiar provision where the time limit for revision is also same as the original due date, that is 27th July 2017. For this, even this provision was challenged in the many high courts. However, the many of the high courts did not deal with this issue. As far as the validity of Rule 120A is concerned, it still remains open. Now, coming back to Rule 117, it essentially provided that the consequent to 1/7/2017, the assessees were required to file Tran 1 return for claiming transitional credit within 3 months, which is extendable by another 3 months. Essentially, 6 months time was available to assessees for filing of Tran 1 returns, and accordingly, from 1/7/2017, essentially it's not actually 3 months, it is 90 days plus 90 days. Therefore, in terms of 90 days plus 90 days, the time of 27th December 2017 was fixed in terms of Rule 117, where it exactly fell within the time limit specified in terms of Rule 117. And interestingly, after realizing the technical glitches and considering that many assessees were clamoring for the revision of Tran 1, which, and also there were a number of technical glitches involved, there was a demand for allowing the revision or opening of a portal for refiling of Tran 1 during immediately after the due date, expiry of due date on 27th December 2017 onwards. A subsection 1A was introduced in Rule 117, which provided, in fact, it was inserted on 10th September 2018 initially, so that it provided an initial extended period of filing the Tran 1 only in case where there was a technical glitches on the common portal. That was the word phrase which was used, technical glitches on the common portal. And considering that this issue was ongoing and a number of assessees were contesting this issue across India in many high courts, government thought it right to extend the time limit under Rule 117 was sub rule 1A many times. Totally 3 times it was extended, and ultimately the last date of extension under this 117 sub rule 1A was on 31st August 2020. It was during the lockdown period and it got expired. Notwithstanding this provision, there were many high court judgments soon after this expiry of this 31st August 2020, wherein they continuously started holding this and also giving relief across India, wherein on various grounds, mainly on the issue of technical difficulty on common portal, and giving the setting the time, new time, even after this 31st August 2020. And interestingly, there was no definition of the term technical difficulty on the common portal. And in this background, I would like to highlight some of the judgments on this issue, which led to the Supreme Court deciding this case finally, consequent to the concurrence by the central government in the month of July 2022. I would like to discuss some of the judgments, very few across India, wherein various high courts have held that the failure to file the returns. I would like to classify these judgments mainly on two issues. Number of assessees approached the high courts either on the issue of clerical mistakes, that is human error, or on the second issue of technical glitch, or it's a technical error, a GST and technical glitches. Essentially, these two issues were being contested in the high courts, wherein assessees sought relief, and many provisions were also challenged, and including the rule 117, 120A of CGST rules were also challenged as being invalid and violative of Article 14. And I would like to just mention one by one. To start with, SKH sheet metal, Delhi High Court dealt with the issue of clerical mistake, wherein the human error was involved. Delhi High Court held that, considering the objective with which statement of objects through which the GST was introduced on 1/7/2017, held that there has to be an uninterrupted and seamless chain of ITC, therefore, which is the heart and soul of the GST law, and also held that it is a vested right. The ITC under the existing law, that is the erstwhile law, is a vested right, and therefore the assessee is entitled to revise the returns, that is Tran 1 return, even if there is a clerical mistake, notwithstanding the technical problems. This was the issue in SKH sheet metal. Coming to the second case in BMW India Financial Services, wherein it is an issue of technical glitch. This is a second case where the assessee had availed the credit, transitional credit, by filing the Tran 1 successfully. However, though the technical glitch was not evident in the GSTN portal, the assessee was not able to take the transitional credit because simply it was not getting reflected in the electronic credit ledger. And there was no uh, evidence that there was any lapse or technical glitch by the assessee at the time of filing of transitional credit. And therefore, High Court held that assessee is entitled to revise their Tran 1 and directed the authorities to open the portal. And subsequently, there was another landmark judgment by the Punjab and Haryana High Court, wherein there was a technical glitch and the Rule 117 was challenged. And High Court categorically held that unutilized credit arising out of erstwhile law like excise and service tax cannot be taken away merely on procedural or technical grounds, and it cannot be termed as mandatory. And it clearly held that Rule 117 is violative of Article 14, and the ITC transitional credit is a vested right. Therefore, it directed the authorities to open the portal again. And the same judgment was challenged by the department in the year 2020 itself. And Supreme Court had dismissed the SLP filed by the department. That was a welcome relief to the assessees across India. And it was thought at that time the Supreme Court will follow this precedent in all other judgments where the challenge to this Tran 1 judgments of various high courts are being taken to Supreme Court. And next is the judgment of Gujarat High Court in Siddhartha Enterprises. Similar to the earlier judgment of Punjab and Haryana, this case, which was decided in 2019, the Gujarat High Court clearly held that it is a vested right. And also it referred to the provisions of Section 174(2)(c) of CGST Act, saying that the right to carry forward credit is a right or privilege acquired and accrued under the Central Excise Act, and it has been saved under Section 174(2)(c) of the CGST Act. And therefore, when it is saved under Section 174(2), it cannot be allowed to be lapsed in terms of Rule 117. And this was a very good judgment. And it also directed the authorities to open the portal for revising the Tran 1 returns. And finally, Heritage Lifestyle, which is a 2021 judgment by Bombay High Court, wherein it is considering that there was a mistake due to technical glitch of the portal, where the non-filing of Tran 1 was there on 27 December 2017. It directed the assessee to file the return manually because there was the department was not allowing the opening of Tran 1. And also it held that merely on technical ground, the denial of transitional credit cannot be denied. Next two judgments. These two, JCB India and Philco Trade, are interestingly on a slightly different provisions. As I mentioned earlier, Section 140(3) dealt with in respect of the credit of inputs lying in stock or inputs contained in semi-finished goods or finished goods. Essentially, it referred to the inputs lying in stock as on 30th June 2017. And one of the conditions in section 140 bracket 3, essentially a condition in clause 4 of section 140 bracket 3, was that the invoice or prescribed amount document, the any other document, should not be earlier than the 12 months prior to the appointed date. Essentially, what it meant was you can avail the transitional credit in terms of 140 bracket 3 as on 1/7/2017 only to the extent of your inputs, as long as they were purchased only on or after 1/7/2016 onwards. Therefore, if any assessee had a purchases prior to 1/7/2016, that is 1 year prior to the appointed date, such a transfer of transitional credit of the inputs in terms of 140 bracket 3 was not allowed. And specifically in these two cases, JCB India in Bombay High Court and Philco Trade Limited in Gujarat High Court, these particular provisions, that clause 4 of section 140 bracket 3 was challenged. And interestingly, there were contradictory judgment. Initially in the year 2018 itself, Bombay High Court, for its own reason, held that transitional credit cannot be termed as an absolute right. It held that it is a conditional right. Therefore, it held that this particular restriction contained in clause 4 of 140 bracket 3 is valid, constitutionally valid. It held against the assessee. And it said that you cannot expect government to give transitional credit without putting any conditions. That was the judgment. However, immediately after the Bombay High Court judgment, within 6 months, Gujarat High Court in Philco Trade Center Private Limited held totally opposite to the Bombay High Court judgment, held that the condition 4, which put the restriction of inputs being purchased only within 1 year prior to 1/7/2017, as being ultra virus the provisions, the main objective of the GST law. And also it held it cannot be termed as a retrospective, and the benefit of credit on eligibilities is a vested right. It cannot be taken away by putting a condition in subsection 3 of the section 140. Therefore, Philco trade judgment was in favor of the assessee, which this quashed this particular condition and allowed the assessee to take the transitional credit on the inputs lying in stock in terms of section 140 bracket 3. Interestingly, both the parties, the JCB India as well as Philco Trade, both went up to Supreme Court, and both were lying for waiting for this for many years to come. And finally, it got decided by the Supreme Court in the case of Philco Trade, which was the first case being the Philco Trade. And it was all the judgments have now been accepted by the central government, and consequently, Supreme Court has given a direction. And then before we go to the Supreme Court judgment, let's see the one more judgment of Karnataka High Court, wherein division bench of Karnataka High Court dealt with the terminology, technical difficulties on common portal, and it observed that this particular term has not been defined by the rule-making authority. Therefore, it clearly directed the department to open the portal on or before 31st March 2021. And it specifically also noted that revenue is at liberty to verify the genuineness or merits of claim in accordance with law. If you see this judgment, and even the earlier High Court judgments of various High Courts like Bombay High Court and Gujarat High Court, all the High Courts are, while directing the authorities to open the portal for revision or filing of Tran 1, it gave liberty to the government to verify the genuineness or merits of the claim made by the assessee in accordance with law in terms of the GST provisions, as to whether they have fulfilled the conditions in terms of section 140 read with the rules as applicable. And therefore, essentially the same, the ratio of all these judgments put together have been culled out by the affidavit filed by the central government before the judgment. Based on that affidavit, Supreme Court finally gave its judgment. Now, finally, let's go to the judgment of Supreme Court, which decided on 22nd July 2022. There is no arguments by any of the parties in view of the fact that central government itself filed an affidavit stating what is the stance taken by the government as far as the transitional credit is concerned, and accordingly, Supreme Court judgment recorded these particular 6 paragraphs as far as allowing the filing or revision of Tran 1 and Tran 2 and opening of GSTN portal. For this purpose of discussion, I have set out the relevant paragraphs, point number 1 to 6, as extracted from the Supreme Court judgment as it is. Let me read out the very important directions given by the Supreme Court, wherein it says the portal will be opened for 2 months for filing of Tran 1 and Tran 2 with effect from 1st September 2022 to 31st October 2022. Of course, this particular date was subsequently changed and extended in the sense by 4 weeks. And the second direction is considering the judgment of high courts and then prevailing peculiar circumstances, any aggrieved registered assessee is directed to file the relevant form or revise the already filed form, irrespective of whether the taxpayer has filed writ petition before the High Court or whether the taxpayer has been decided by the ITGRC. In this, I would like to mention 2 points here. Any assessee, any registered assessee is now directed to file or revise Tran 1, notwithstanding and irrespective of the fact that whether they have filed any writ before High Court or not. That means any registered assessee who has not even filed any writ petition before High Court is entitled to file the writ. That means across India, all the registered assessees will be given this opportunity of filing or revising already filed Tran 1 returns in their portal. Second point is where an assessee has approached the nodal officer of the Grievance Redressal Committee IT Grievance Redressal Committee, whether he has approached the nodal officer and whether the nodal officer has decided or not, or whether the SSC has approached the nodal officer of Grievance Redressal Committee or not. Irrespective of this, all registered SSCs are eligible to file or revise their returns. Therefore, essentially, this facility of filing or revising the transitional return is available to all registered SSCs across India without any restriction or conditions. However, there are guidelines. Therefore, it says GSTN has to ensure that there are no technical glitches during the set time, or for obvious reasons, because the entire delay in or clarity in allowing the transitional credit for a period of 5 years is essentially due to the fact that there was a technical glitch in the portal. And next, the concerned officer are given 90 days thereafter to verify the veracity of the claim. And thereafter, appropriate orders will be issued on merits, and only thereafter, the condition 5 says, only thereafter the transitional credit will be reflected in the electronic credit ledger. And finally, if the required, GSTN Council may issue the appropriate guidelines, for which GSTN has also issued a procedural guidelines for filing now, and for scrutinizing the claims, it will also be issued by the GSTN Council thereafter. Consequent to this judgment on 22nd July 2022, there was one more hearing before the Supreme Court in the very same matter, and wherein on an application filed by the government representing that they require some more time for opening of the common portal, Supreme Court granted an additional time of 4 weeks more. Therefore, the dates which was supposed to start from 1st September was shifted to 1st October 2022 and to end with 30th November 2022. Therefore, from if we consider this is 26, we have only 4 days remaining. 30th November 2022 is the last day for filing or revision of the transitional return in the common portal. And therefore, I would request all assessees to file or revise their file TRAN1 within 30th November, and this date will not be extended for any reason. And this being the direction of the Supreme Court, and there is no possibility of even fighting this for extension of the time in any of the high courts. This cannot be, there cannot be any litigation thereafter to claim the extension of the time after 30th November 2022. Let's summarize all these directions given by the Supreme Court as accepted by the government as well in the affidavit filed there. And the same thing is summarized here. The common portal will be opened from 1st October to 30th November, and all taxpayers will be allowed to avail this opportunity of filing the TRAN1 afresh and also revising the TRAN1 if they have already filed the TRAN1 earlier. And GSTN to ensure that there are no technical glitches this time, and authorities have 90 days to verify the claims filed by the assessees, and amount to be credited to electronic ledger only after verification and issue of order, and GST Council to issue guidelines for scrutinizing the claims. And there is also CBIC has been directed to issue the appropriate guidelines in order to scrutinize the said claims. Thereafter, they will issue. And now, as we are still within the period of 2 months, wherein the filing or revision of Tran 1 has to be done on or prior to 30th November 2022, let's see what is the procedure for doing the same. This procedure was highlighted by CPIC circular of 180/12/2022 issued on 9 September 2022, wherein they have I have put this in a flowchart manner, where you have to submit a copy of the following documents within 7 days of filing the declaration of Tran 1, Tran 2. And it says downloaded Tran 1, Tran 2 with a self-certified copy of the same, copy of Annexure A, and copy of Tran 3 wherever applicable, and keep all the requisite documents and returns, invoices in support of transitional credit. And in terms of the Supreme Court direction, department has 90 days to verify these claims. After verification by the department within 90 days, the jurisdictional officer shall pass an order, appropriate order, and post consequent to this verification and issue of order, only the transitional credit will be reflected in the electronic credit ledger. And this particular circular also refers to one of the important issue, which I will also discuss later, is where the assessee has already availed transitional credit in the first stage itself, and where there is any notice has been issued by the department, which is in adjudication or appeal proceedings relating to transitional credit, and where the transitional credit has been rejected by the department and it is pending in adjudication or appeal, then it is directed that no fresh filing or revision of the very same transitional credit should not be done by the assessee. However, the words used in this circular is very interesting. It says it is not appropriate for the assessee to do that. However, in my opinion, there is no statutory restriction for not filing the fresh or revision transitional credit merely because your initial transitional credit has been rejected, or is it pending before the adjudication or appeal. Because if the assessee chooses, he can always withdraw that appeal and again make a fresh filing. I think this particular point needs to be discussed. Those assessees who have the transitional credit matters which are pending before adjudication or appeal can take a stand that they can withdraw the earlier and make a fresh filing or revision of transitional credit in this window before 30th November 2022. Now let's go to the procedure. Procedure as given in the GSTN advisory. This I would like to just quickly take you through the procedure, and it is very relevant to know that every assessee has this opportunity, whether he has claimed that in the year 2017 or not, and also wherever the assessees have claimed the transitional credit and it is already showing in their credit ledger in 2017 and they have already utilized, they can always revise their the transitional credit again if there is any mistakes or if there is any missing transitional credit which they want to claim it now. And now coming to the procedure, you have to log into the returns heading, wherein you have to click the transitional form because there is a, under the written dashboard, there is a, on the right hand side, there is a transitional forms that has to be clicked. Under that, you will get Tran 1 and Tran 2. Two forms are. And there is a last, in this particular slide, if you see, there is a Tran 1 option and Tran 2, and there is a upload document where the uploading of document is also permitted. Here in the first column, there is a, it shows status of not filed for all assessees across. Therefore, from here you have to start. That means all assessees will have the status of having their Tran 1 not filed. Therefore, they are entitled and eligible to file the Tran 1 afresh, or they can revise the Tran 1 which is already filed by them again. And they have to answer the first question, that whether all written under the existing law, that is earlier excise and service tax law, for the period of 6 months prior to the 1/7/2017 has been furnished. Answer has to be yes. If you say no, then many of the columns in Tran 1 will not be reflected, because you are not meeting the basic condition in terms of section 140 bracket 1, subsection 1. This is the primary condition of the subsection 1 of the section 140. And once you click this option as yes, then you will be taken to the next slide, which has all the options. If you see the first box, which has a series of 5A, 5B, 5C, and second box 6A, 6B, and third box of 7A, B, C, D. All these particular boxes have, if you click each one of them, each has a provision for the assessees to avail credit in terms of various subsections of section 140, which is indicated below. The first box of 5, column 5A, 5B covers subsection 1, and column 6 covers subsection 2, whereas column 7 covers subsection 3, 4, 5, and 6. Of course, there are other columns also. In subsection 8 is covered in column 8, and other provisions relating to job work and also other transitional provision is also contained in other columns, which is not relevant to the present issue. Next, in terms of GST and advisory, you have to download the this is in case of revising of the transitional forms, that is Tran 1, where the assessee has already filed Tran 1, then he has to download the earlier filed Tran 1 by clicking the download earlier filed Tran 1 option. It is, please note, this is available only for the first time. Once you file a fresh Tran 1 now during this window, and also revise and file the Tran 1 and submit it with digital signature, then this option will not be available. Therefore, it is advisable for all assessees to download this earlier Tran 1 form and save it and keep it. And next is file the information requisite in the table. As I mentioned, there are various columns which has to be filled using the Excel template, and upload the JSON file, and download the completed Tran 1 details, and verify the same, and finally submit and file the same with DSC or file with EVC. This is the usual procedure which has been provided in the GST and advisory. And as mentioned earlier, consequent to this filing or submission of Tran 1 and verifying it with DSC or EVC, you have to file Annexure A in terms of CBIC circular within 7 days of submission of this particular Tran 1 with DSC or EBC. You have to file the same with the authorities. And as far as this filing of Annexure A within 7 days, the interesting practical issues are happening. If you are availing credit of VAT, and if you go and if your jurisdictional office is central tax officers, the interesting responses are coming. They are saying you are availing the VAT ITC. Therefore, you please go and submit to state authorities. Even though my jurisdictional office is a central state officers. Similarly, where you avail the service tax credit and you are a service provider and your jurisdictional office is state officers and they are refusing to accept this Annexure A, and in such a situation, we are advising, please send the Annexure A by registered post, because there is no provision for uploading it in portal. This is an Annexure A is a in terms of CBIC circular we have to file within 7 days. Therefore, it is advisable to file where some authorities are not accepting. They want concurrence of the jurisdictional department. As far as the state GST or central GST is concerned, it is advisable to ensure that this Annexure A is submitted within 7 days. And of course, Tran 2, there is one interesting issue here. Similar to Tran 1, there will be a window, and the procedure, only one important procedure as far as Tran 2 is concerned, is that the procedure is listed in this flowchart. One of the issue which is clarified in CBI circular is, earlier in terms of provisions contained in Rule 117, Sub-Rule 3, Tran 2 was supposed to be filed in 6 monthly installment returns, 6 monthly returns. Now, in terms of CBIC circular, it is advised that you have to file by way of a single Tran 1 return, a consolidated return, and you have to submit the same like Tran 1 and submit it with the DSC or file with EBC. And finally, you have to upload the documents, and there is also an upload the declaration in Annexure A, which I just mentioned, and this is what this particular Annexure A in terms of section 180 reads like this. Basically, it requires assessee to provide all the registration details, and point 4 onwards, let's see this particular Annexure A in brief. It says whether any earlier Tran 1 is furnished. 4.1. If it is yes, you have to give the details of the date of furnishing of earlier Tran 1 and Tran 2, and amount of credit claimed earlier, and amount of credit earlier through Tran 2, and whether notice under section 73 or 74 has been issued, yes or no. And if it is yes, you have to give the details. And as I mentioned earlier, in terms of circular, it is held that wherever you have received a section 73 or 74 notice for adjudication against your earlier transitional credit, then it is not appropriate for you to file it again. That's why they want to collect that details. That will be subject to verification, and it appears that as per the CBIC circular, wherever there is an adjudication pending, you cannot revise or file the Tran 1 again. If you do it, it will be denied during the period of verification of which will be made by the department in the next 90 days. And they are also asking about the details of appeal in 4.7, and you have to give the appeal details. And coming to 0.5, amount of credit claimed also to be reflected in Tran 1 and Tran 2, and whether the notice is issued under the existing law. As far as you have to answer that, if there is any notice issued under existing law, means the under central excise or service tax. And finally, you have to give the details of the notice also. And coming back to this procedure, and finally, let's address some of the issues relating to these transitional credit. What are all the issues which are coming up? And where an assessee who has carried forward the SENMAT credit under the Tran 1, which was filed earlier. However, he had forgotten to carry forward the ITC under VAT. Now, can he file this? The answer is yes. He can revise his Tran 1 to include the ITC under VAT also. The details, like I'll answer one more question here. In this particular instance, let's say he has already availed the transitional credit relating to excise and service tax, and already it is reflected in credit ledger, and he has utilized also. Now, he has to claim the ITC under VAT. What is the amount he has to file it in the revised return? Is it only VAT ITC, or is it the entire amount, including the ITC of excise and service tax? Answer is, you have to claim the entire amount of ITC, including the earlier return of excise and service tax ITC, as well as the present claim of ITC under VAT. Therefore, you as an assessee, you have to claim the entire thing. And when you file Annexure A, you have to give the details of the claim made by you. And it appears that as authorities will verify the credit already claimed by the assessee in the credit ledger, and they will only allow the differential ITC to be reflected in the fresh round of revision by the assessees in these kind of situations. Now, is it possible for the assessees to avail transitional credit through GSTR 3B, that is monthly return? Answer is no. Circular is very clear, and also it requires a declaration that you have not claimed the credit through GSTR 3B. You have to give a declaration that transitional credit has been claimed through GSTR 3B and has been reversed along with interest. If it is not reversed, you have to give that declaration, so that in the verification, this particular issue will also be examined. Next issue is whether an assessee can carry forward the balance of credit on education cess or secondary higher education cess or Krishi Kalyan cess. Now this matter is settled in terms of Madras High Court judgment in Sutherland Global. It is advisable not to transition this education cess and Krishi Kalyan cess because of the ruling that these cesses were not subsumed in the new GST laws, and therefore it is not entitled for transition. in terms of section 140. And one more issue. This is where the VAT return has been revised after 27/12/2017. Please note, the original due date for filing the Tran 1 was 27th December 2017. And for some reason, some assessee had also filed a revised return under the erstwhile state VAT laws and filed a revised return in the year 2018. Now the question is whether such an assessee can file the claim for ITC and such VAT based on the return filed in the year 2018. Answer is yes, because in terms of section 140 subsection 1, it allows, both in terms of CGST as well as state GST, it allows carry forward of VAT credit pertaining to the return filed for the period ending June 2017. However, there is no condition which says that you should have filed the return within the prescribed period under the earlier laws. Therefore, he may have filed a belated return and which is permitted under the particular VAT law. If it is accepted under VAT law as a valid return, even though it is filed belatedly, it is permissible for the assessee to avail that credit when they file a fresh Tran 1 or revise their Tran 1 now during the period up to 30th November 2022. I think with this, I would like to conclude my discussion on this Tran 1. And if you have.
Thank you, Raghavendra,
Yes.
for a very comprehensive presentation. You have not only highlighted the recent developments of how to file it, you have also given a background of the entire controversy. In fact, all these things came because of the arthritic system which we had. It was supposed to be athletic, and which eventually became a tragedy of errors. I cannot call it as comedy of errors.
Yes.
And matter went up to Supreme Court, and at last the good sense seems to have prevailed. Although there are some issues in the CBIC guidelines, there are restrictions imposed. They say that if orders have been passed, you have to go for appellate remedy rather than choosing this route. All these things will lead to one more round of litigation. Anyway, we'll cross the bridge when it comes. Then, as far as the questions are concerned, there are a few questions in the chat box. If you can see those questions, then you can start addressing.
Yes.
You are able to access it?
1 minute, let me. Let's start from one more. Can we take excise credit as per bill of entry under transition, which is not set off against service tax earlier in service tax return? There is no clarity here. If that particular bill of entry is taken as credit in the service tax return, then they can avail credit in terms of subsection 1.
Probably they are referring to CVD and SAD. Yeah.
No, their question is whether the service provider can avail the CVD. Yes, if some of the service provider like cables, if they import rotors, and the bill of entry credit can be availed by the service provider. The condition is they should have availed it in the ST3 returns validly as of the they could have done it in the belated return, but they should have availed in ST3. If
Because
the
it is
answer is yes,
transition from the old return to the new transition form.
transition form, that is permissible.
Okay.
There is no restriction that bill of entry is also permitted by the service tax returns. Now let's go to, please discuss the practical recent issues.
That we have already discussed.
That already done. Thanks for system. Okay. Earlier we had filed Tran 1 and migrated under 141 of SGST. Credit, however, missed out to claim credit under 140 bracket 3. Subsequently, there was no notice or order from the department. Now, can we file Tran 1? If yes, do we need to show credit under 141? Already we have received SGST credit ledger, or just need to claim 140, which was missed out. In fact, I have covered a similar situation already, but I will answer this particular question. Here, you have claimed the credit under 140 subsection 1, which is already reflected in your SGST credit ledger. That is done already. As far as your claim under 140 subsection 3 is concerned, which you had missed out, please, you are eligible to take credit. However, the procedure is you should claim both now. The subsection 1 credit in terms of returns, as well as subsection 3 on inputs, also to be taken together. Let us say your credit under subsection 1 is 1 crore and your eligible claim under subsection 3 is 50 lakhs. In the revised return, now which you have to file now, you should take the credit of 1.5 crores, 1 crore plus 50 lakhs, both. And in Annexure A, you have to reflect this, that the fact that you have already claimed 1 crore, which the department will verify, and they will permit you to claim the differential credit of 50 lakhs. Therefore, my answer to your query is, please revise the return, Tran 1 return, but include all credits, including the credit which you have availed earlier, as well as the credit which you want to claim now. But show the amounts of ITC claimed earlier in Annexure A and file within 7 days. And this will be, of course, subject to verification. Hope that clarifies. Next, whether carry forward of ISD credit by registered ISD distributor can be made without being separately registered under GST is permissible if registered under GST, whether this carry forward falls under 140. No, I'll put it in a simple way. 140 bracket 8 covers ISD. And if you are, but you are saying in this that you are not registered as ISD. Earlier you were registered. I think this needs to be, I think you can, Mr. Tirumalesh, you can contact me later because the question itself is not clear. Next. In a case of works contract service provider who had paid service tax and VAT on contracts which are work in progress as on 30th/6/2017, whether the said person is obligated to pay GST under 142(11)(c) and avail transitional credit of VAT and service tax paid. If answer to above is yes, whether he is obligated to pay interest for the delay in payment of GST. If the supply is made after appointed date, whether no, of course, 142(11)(c) is an issue where does it cover the works contract? It may not cover the work. You can avail, of course, the transitional credit on this, and there is no question of payment of interest. But this particular provision is section 142(11)(c). I think, 1 second, let me just open that. If I just refer to 11(c), notwithstanding anything contained in section 12, no tax shall be payable on goods under this act to the extent of tax was leviable on the said goods under the value-added tax of the state, where tax was paid on any supply both under the value-added tax or under Chapter 5 of Finance Act. Tax shall be leviable under this act, and the taxable person shall be entitled to take credit of the value-added tax or the service tax paid under the existing law to the extent of supplies made after the appointed day, and credit shall be calculated in such manner as may be prescribed. Now, now, of course, you have to pay GST under 142(11)(c) to the extent of WIP. That answer is very clear. Now, there is no question of paying interest, because you are referring to the Tran 1, which is being filed now, of the service tax and VAT on the contracts relating to that WIP. If your question is that, then there is no question of payment of interest under section 50.
Raghavendra, just to add to this point, probably what they are asking is, since that entire project is going to be captured under GST law, and they have paid partly under service tax and VAT, they have missed out to take the credit.
Yes.
And the balance amount, they would have already paid GST.
Yes.
But now that they are transitioning this credit into the GST regime, will the department come and say that the value on which you have paid service tax and VAT, which you are going to pay GST now, you pay interest on that? That is the question.
If that is the question, because this is a window which is open specifically now, availing the transitional credit now in terms of this 142(11)(c), there's no question of section 50, because even if you go to section 50(3), it only talks about where you have availed wrongly, essentially where you are not ineligible credit if it is availed, 50(3). Therefore, in my opinion, there is no question of attracting section 50 at all, because this particular transitional credit is being taken in terms of Supreme Court judgment, and this credit, whatever is claimed by the assessee, will be verified, and if it is found valid in terms of section 142, they will be allowed. The question of time, that is his question, I think, because he is availing in 2022. Is it the question?
I think you can proceed to the next
Yes,
one.
sir.
If he wants, he will type out any supplementary question.
Yes. And next, taxpayer failed to file Tran 1 in first place. Instead of going to court for non-filing of Tran 1, taxpayer filed refund claim of send-back credit balance under excise law. The refund claim was rejected by adjudicating authority on merits, and that such credit cannot be claimed, which is correct. Appeal was filed, and the same was dismissed by appellate authority. OIA was not challenged before higher authority. Whether now Tran 1 can be questioned on the basis of above proceedings? Fortunately, no. In this particular situation, it is advisable for this taxpayer to file the claim of transitional credit in the Tran 1, and anyway, he has decided not to challenge the OIA. Therefore, as far as his refund claim under the erstwhile excise law has attained finality, and he has not claimed. It is not successful. Therefore, and that is not a condition under the GST law. Presently, what is being asked by CPIC is that you should not have received any adjudication or appeal under the GST law as far as transition credit is concerned, which is availed. Next one is, can we avail TRAN credit for service tax paid on advance under table 142.11c? If you no, this cannot be a transitional credit. See, in this case, it is a case where you have paid the service tax in advance, paid by the assessee himself. That cannot take there is no enabling provision to avail this credit. Next one. Can we take excise credit as per bill of entry in TRAN 1? We have not adjusted this with service tax in service tax return.
I think it is the same question which you have already done.
Is it 100% as for same thing?
Yeah.
I think in case of service tax provider, if there is a bill of entry, you can claim it in the TRAN 1. It is possible. It is permissible. Is there a time limit to carry forward TRAN 1 credit? It is original TRAN 1 credit filed in 2017 as stock is still lying. No, I think if I answer that, there is no time limit except the stock as mentioned in subsection 3, where it says that if your stock is purchased prior to 1/7/2016, you are not eligible. Otherwise, you can avail the transitional credit on all the inputs which are lying as on 30th June 2017. And one of the, I think that is the question, right? However, I also mentioned Supreme Court has said all the issues will be kept open. Therefore, all professionals, you don't have to worry. Many issues will come after this round of ITC claim by the assessees. If an assessee has filed TRAN 1 by claiming credit in CGST of closing stock of VAT, can he revise by claiming in SGST? Yes, please. There is no question of effect in interest because it will be only a change. If it is already reflected in credit ledger, you have to disclose it in your annexure A, and appropriate adjustment will be made by the authorities, and they will not be allowing you to get the fresh credit. It is only change in the credit claim. Can we avail credit for service tax paid on advances? Again, if S under 142.
This also you have addressed.
Already addressed.
They should also look at 142.11b in this context.
I think 11b.
You can go to the next
one. Then by mistake, it's not taken in ST3. No, if it is not taken in ST3, you cannot claim. Then TRAN 1 verification already done, finalized now. Can we file the portion left out earlier for VAT? So again, we need to file revised, or can we go for only with respect to residual portion? I am saying you have to revise the entire, including the earlier claim, whatever you already claimed, and which is reflected in your credit ledger, and plus the fresh VAT ITC. Please claim everything. Then what is the process of filing TRAN 3? Whether all copies of invoice, I think this is a invoice required. All copies of invoices are required to be produced for verification in case of TRAN 3 that relates to that CTDs. What is the time limit for utilization of TRAN 1 CGST credit for? No, there is no time limit for utilization. Yes, sir. Next is MWAT credit for stock claim as CGST in Tran 1. Can assessee file the revised Tran 1 for claiming as, again, it's only a change in the heading, and you can, if you are already permitted to use the credit in your credit ledger, there is no requirement for revision. But if you want to revise it for the appropriate head to change the classification from CGST to SGST, you can do it. However, there will not be any interest. That is also provided in section 77. Can we claim refund of Tran 1 credit? If yes, what is time limit process? If no, then assessee wants to shut his business. What are his option? No, not possible to claim the refund, except refund is permissible only in terms of section 54, in terms of the cases listed therein. No other refunds are permissible. Service tax carry forward because of credit note issued on sales. Can we file Tran 1? Is there any time limit to issue and report credit notes on sales in service tax law? There was no time limit under the service tax law because of credit note issue. I am not able to. Can we file the Tran 1? No. If you are talking about service tax law, there was no such provision which provided for credit note or the time limit under the service tax law. So, as per your advice, GST paid on service tax advance, no credit eligible, any remedy? Service tax advance, I think anything.
I already told 142.11b can be explored.
Section 142.11b. Let me read it out. Notwithstanding anything contained in section 13, no tax shall be payable on services under this act to the extent of tax was leviable on the said services under Finance Act 1994 is what it says. I think you refer to, I think that is Tarang. You have to refer to section 142.11b. What was the time limit for availing SENVAT credit under erstwhile service tax regime? If we file ST3 today, is it possible to carry forward the SENVAT credit through Tran? No. Answer is no, but I'll also answer in 2014, they introduced a time limit for under the SENVAT credit rules. Therefore, and also, you cannot file ST3 returns now. All the time limits, I extended time limit for filing the last ST3 is also over. Therefore, there's no question of any filing the belated return. So, therefore, there's no question of any filing the Tran 1 now as far as the missing SENVAT credit is concerned. Can we reclassify Tran 1 credit in CSI? Currently, full credit was given in CGST only. If you want to revise your Tran 1, please do it. But if you have already utilized, then of course, there is no question of any payment of interest in this reclassification. But it all depends on whether you want to do it where you have utilized the credit already, which is reflected in your credit ledger. Sir, we have taken Tran 2 credit not able to take due to technical glitch after due date in 3B. We are required to pay interest for all this year. No, there is one clarification given clearly in the CBIC circular that you cannot take transitional credit under Form 3B. Therefore, whatever transitional credit which is availed in your 3B monthly return is not permissible, and in fact they require you to reverse it with interest if you have availed. But if you are referring it as tran 2, it is not correct to do it in monthly 3B. Rather than that, you should have filed originally a tran 2 for 6 months, which you should have done it depending on the sales. I think that's it.
Any other question from the participants? If you want to talk to the speaker, you can raise your virtual hand. Mr. Sachin Jain. Mr. Lakshman, can you allow him to speak? Is it possible?
Archana Jain also.
Yes.
Hello, sir.
Please.
Yeah, hello, sir. Sir, I have asked a query regarding that service tax wala thing. I couldn't get it. What your point was? I couldn't get you, sir.
No, you can.
Yes, I can elaborate. The quarter one service tax return was filed by the party, wherein there was excess credit note reported of sales, due to which ultimately the service tax return is being reflecting as carry forward. And there are some expenses also due to overall there is a carry forward of 10 lakh rupees.
This carry forward is reflected in your ST3.
Yes,
for the, in 2016-17.
Yes,
17-18 first quarter.
Yes.
If it is reflected, you can carry forward.
But sir, the breakup of this, like a 5 lakh, for example, 5 lakh rupees is due to the credit note of sales, which were and remaining 5 lakh is of the expenses.
Oh, in ST3.
Yeah. So now the party is confused. Should they go for Tran 1 or not?
But this particular credit note issued under the service tax law is also a SENVAT credit note.
Yes.
Therefore, you are eligible.
Okay.
I think now I got it. See, what has happened is under the service tax law, though there was no format, it is nothing but a reversal of service tax, which
reversal of excess service tax paid.
Is paid, and it is being taken as credit, which is permitted under SENVAT credit rules. Therefore, it is validly to be claimed as a SENVAT credit. And if you have already shown it as a credit in the credit column of ST3, you are eligible. Please avail. You are entitled for this.
Sure, sir. Thank you so much, sir.
Yes. Yes. Next one, please. I think.
Good evening, sir. This is Archana Jain from Delhi.
Good evening, madam.
Sir, I have 2-3 practical issues that I just wanted to raise on this forum. One is 142 talks about the credit with respect to capital goods. And it only talks about unavailed, unutilized capital goods. Correct. So there is a genuine problem with SSI exempted assessees because that time they were not eligible. So they are carrying 100% as unclaimed.
Unclaimed, yes.
So that is also being contested by the department. One is
madam, if you see the provisions, it says unavailed. But the question is, in case of SSI SSCs, are they eligible? Is it admissible? Is it an admissible?
Sir, SSI exemption is only up to a threshold now. Like, see, my genuine case is that they got registration in December, and by the time they got the registration, they were auto migrated.
Yes.
So they were auto migrated to the GST. So they didn't had the provision to avail that that credit in the excise regime.
Yes, very interesting. But if you read section 140 bracket 2, where that condition, the proviso, if we read, provided that the registered person shall not be allowed to take credit unless the said credit was admissible as SENVAT credit under the existing law. That means as on 30th June 2017, this particular capital goods purchased by SSI unit should be an admissible SENVAT credit on capital goods. It is an issue which has to, what I would advise is, you can claim the credit now. It will be subject to verification by the department. Why I'm suggesting this is, it has to be contested in High Court.
No, I have already claimed. I have already contested.
But you also know that department will not permit this. In the verification, they will use the proviso.
Yeah. Basically, there are two things: SSI as well as the area-based exemption. So, but area-based exemption does not bar you from claiming. It is only an area-based with certain condition. So, when that area-based was also removed, so that means I'm eligible.
Yes,
the day my capital goods were put to use.
Yes.
And the second interesting issue is, sir, I'm facing with my textile assessees, there is two notification, 29/06 and 30/06. And
correct.
I'm free to use both of them. So whatever I had on stock as VIP or as finished goods, as on date on 30th June 2017, whatever I have carried forward, now they are denying the same, saying that earlier you were exempted. But they are not ready to understand that when my product has become taxable under this regime, so I'm eligible to carry forward. But yes. No, because earlier you were not eligible, so you cannot carry forward also.
So can you go under 140 bracket 3?
I have taken under 140 bracket 3 only, but my assessee has done one mistake. Instead of putting in the tables applicable for 143, they have taken through 141 because they have shown in the return of WIP closing stock as on 30th June.
No, was it done earlier or now?
No, earlier only, and now that is in litigation, so I cannot go for that route also because it is already in adjudication.
Already notice has been issued.
Yes. Already notice has been issued from first level of authority. We have already lost also. Now it is in appeal.
Oh, no. One possible advice is you can withdraw the appeal and file a fresh claim under 140 bracket 3. That's what we have been advising. You can think about it. If the party is okay to withdraw.
Yeah, we can withdraw because that appeal is lying under both the regime. Under excise also they have raised the same appeal, and under GST also. So both of them they are
excise anyway irrelevant for the ITC transitional credit here.
Yes.
That is, I leave it to the facts of the case. But as far as the appeal under the GST law, it is you can examine that. You can withdraw this appeal and make a fresh claim under 140 bracket 3 by revising your transcript.
Okay, great, sir. I'll think on this.
That will be a better bet. Even if it is rejected by the department, you can contest it in the High Court.
Okay, great, sir. Great. Thank you so much. And one academic question last, I'm taking so much of your time. Where they will be charging, how come they are charging interest, sir? Because it is not covered under section 50 subsection 1, 2 or 3 anywhere.
Yes, that's what I said. So 50 bracket 3 is also not applicable here.
Yes. So, but they are asking interest at 18%. So under which provision do we need to pay interest?
Yes. I think this will open up many more cases once they verify and start issuing the orders after 90 days.
Okay,
yes, ma'am.
Thank you so much, sir. Thank you for your time.
It's pleasure. Yes.
We'll take last two questions because we are running.
Yes, last, Mr. Pawan Joshi.
Yes, sir. Sir, I asked about this excise issue because the client is an importer and he has the excise credit as per bill of entry, but the same is not set off service tax. Now the service tax return filing due date is over. So what are the excise credit in last 1 year, means from 1st July 2017, what are the excise is as per stock? Can we take 100% credit of excise what we have paid?
Oh, he had not taken in ST3 because he was not eligible earlier.
No, the service tax number was there. Excise number was not there.
Not
taken in service tax.
No, these imported goods, was it used for the services?
No, it's a finished goods. All are finished goods.
Finished goods, correct. Is it meant for? I am asking you, is it? Let's say that he is not a registered person, and is he eligible under 140 subsection 3?
No, not eligible.
No, you can go under that. See, I was from your question, I was under the impression that whether you can show it in ST3. If you had shown it in ST3, you are eligible. But you are saying it is not shown in ST3, correct?
Not shown.
Not shown in ST3 means these are all the finished goods imported and kept. There is a bill of entry showing CVD portion.
Right.
And to that extent, you can go under subsection 3. You can claim the ITC under subsection 3 as a credit in the inputs contained in finished goods. But it should be for the services provided by you.
Okay. Okay.
If it is unrelated,
Yes.
I think that then it may not be eligible.
Okay. Thank you, sir. Thank you.
Yes. Yes, I think Tarang. Last question, Mr. Tarang, Chartered Accountant, Kotari. Mr. Lakshman.
Good evening, sir. Actually, I have raised a query in chat box also, and you have answered my query. Now, one thing I want to get clarification: the advance, what sir has already told that it is in 12B, 11B. But if it is 11B, it is no tax to the extent tax was leviable under the services in Chapter 5.
Yes.
And not under this act, but my services are taxable in both under the service tax law and the GST law. So how can I take credit of service tax paid on advance? Because there are no other tab where I can take the credit of service tax paid on advance. Navinji, if you can answer my question, sir.
So what we said was, to the extent you have already paid service tax, there cannot be GST levy. That's all. If you apply 142(11)(b).
Okay, that's what I.
There's no credit involved there.
No, there is. If I remember, there is one Bombay High Court judgment on this claim made under level 142(11)(c) in terms of this advance. I think if you can get in touch with me, I'll be able to.
There was one advance ruling of Sapurji Palanji where they have denied the credit of such sort of advance, where partly they are adjusting the advance.
No advance ruling, they will deny everything. Therefore, there is no.
True. And sir, what has happened that I have filed Tran 1 where I have got the stock. I am a service provider. I have filed the Tran 1 where stock has been shown, and 4 returns out of 6 returns Tran 2 has been filed. Last 2 months, Tran 2 returns I am not able to file due to technical glitch. So the credit was substantial. That's why what we have done, we have taken it in 3B with Gujarat High Court Siddharth Enterprise judgment and one Punjab and Haryana High Court with intimation to the department that we are taking this credit as the Tran 2 is not, we are not able to file Tran 2 due to technical glitch. So now, because this was not known at that time that Tran is going to reopen, nobody was under the impression the credit was substantial. So I have taken in 3B. So is that what you are saying? Because Section 50, as you are already discussing, that no interest is leviable. So what is your view on that? How? Because we cannot miss the credit, and we have already.
Yes. My advice here is, you can reverse what you have availed in 3B.
Okay.
With interest, because that's what the if you go as per the CBIC circular, that's what they want. And you file a fresh Tran 2 return for all consolidated 6 months. And also mention how much credit you have already availed in the regular Tran 2 for 4 months. And the balance in 2 months in 3B. So all the details has to be given in the
credit which what I have availed in 3B, that has to be reversed. It has to be reversed right now, or when they are
no, there is also a column which says that you should also give a detail. If not reversed, you should give that declaration. You are not reversed. As on date, you are not reversed.
Okay.
You have to give that. I think that will be taken up in the scrutiny and the verification. They may ask you to reverse with interest.
That is okay, but because what will happen that original credit we have already utilized, and now if we are reversing that credit and they will reject the claim, then we have got double loss.
Yes.
So we can put that we have not reversed the credit, and if they ask us to reverse, we can reverse that credit.
Yes. Yes. At the time of order, I think during the verification, maybe a proper representation needs to be made.
Okay. Thank you very much, sir.
During the 90 days period.
Yeah. Thank you, sir. Thank you.
Yes.
I think we have come to the end of the session. So I thank you on behalf of CGPI for a great presentation on the topic. And we also thank the participants for their active participation and unconditional listening. And we would request you to support our activities by becoming members and also participating in all the future programs. I saw Mr. Ishan. Would you like to address the participants? Ishanji? Is there, but anyway, we'll conclude the program. Any announcement from Mr. Lakshman?
Before that, I would like to thank you all the participants and Mr. Naveen for this opportunity.
There is no announcement, sir. Yeah, if there is anything, we will post in the WhatsApp groups.
Okay. This video will be hosted in the official YouTube channel of CGPI. You can have a look at it. You can also send it to others who may be interested. So we will end the session. Thank you very much and have a nice evening. Thank you.
Thank you.
Thank you, sir. Thank you.